Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 7th December 2021 in the international market. After last week's Fed dropping the transitory word from their policy speech, market expectations have grown for the Fed to combat inflation seriously. On the other hand, Omicron variant has now been detected in almost one-third of US states. But as the early data suggests that Omicron is not being so lethal, US 10-year yields rose 8 basis points, closing at 143 percentage points, and 30-year rose 6 basis points, closing at 175 percentage points on Monday. In the crude oil market, crude oil prices in India and abroad rose sharply yesterday after Saudi Arabia hiked the selling price for all grades of crude sold to Asia and the US. Crude is trading at $73.64 per barrel. Short-term range for crude is 73 to 77. In the currency market, dollar index is at 96.28. Short-term range 96.13 to 96.43. USD CNY or Chinese yuan is at 637, pretty much unchanged. USD INR with a low of 75.19 closed near the day high at 75.42. Support at 75.10 and resistance at 75.50. Trading strategy for currency. FIIs in Indian equity market continues to sell and rupee continues to weaken as we had already anticipated. Immediate weakness is kept near 75.50 and market to remain range bound. In the domestic market, traders are waiting for Wednesday's RBI MPC meeting outcome. This is a very crucial MPC meeting as the outcome will define the rate path for short-term yields. Most probable outcomes are: probability number 1, RBI may continue status quo citing Omicron concerns but gives detailed path for policy normalization. And probability number 2, RBI may hike reverse repo rate. With these expectations, 563 2026 closed at 569 versus 570 the previous trading day. 610 2031 closed at 636 versus 637 the previous trading day. Yields market was pretty much dull. There were no huge trading volume, and market was trading pretty much flat. As far as the trading strategy for the bond market is concerned, we suggest our listeners to lighten their AFS HFT holding going for tomorrow's MPC. Max expected reverse repo hike is 15 to 20 basis points. Anything about 25 basis points will create panic. Status quo with normalization guidance will not give markets much hope and may be marginally positive. Hence, our probabilistic models are not in favor of risk reward and suggest to wait out with no open positions before tomorrow's MPC. Trading range for 610 2031 seems to be 634 to 637. That's it for today. See you tomorrow with the new episode of Night Snippets.